Everybody, George Moorhead here with Bentley Properties, and today we have a special guest. We have Dan Golden with
Hey,
Cross
George.
Country. How you doing?
Doing well, thank you.
All right. So today's subject. Today we're going to talk about banks versus mortgage companies. Now, we get a lot of questions asking, hey, should I use a bank or shouldn't I use a bank? Hey, what's the difference between a mortgage company or lender versus a bank? And, hey, which one's going to give me, the best deal and make sure I close? Because really, at the end of the day, Dan, wouldn't you agree that one of the biggest stressors to buying a home will be the financial element as they get down to the button and this like the banks requesting last minute documents and kind of that, hey, we may need an extension when they have tens of thousands of dollars tied up in earnest money.
Right, yeah, it's a big problem out there, and the problem is everybody wants to get the best pricing, everybody wants to close their loan on time, and if you don't, there's a lot of risk in that. If you don't close, especially in this market,
Right.
you're risking your earnest money and potentially losing out on the house. I mean, it's such a crazy market right now in the Seattle area that they might take another offer if you don't close on time. Keep your earnest money. I mean,
Right.
do you agree with that?
Absolutely agree. So here's the thing. So in today's market, we've been seeing some, well, I guess really over the last 18 months, some pretty crazy expectations that buyers are being required to meet in order to secure that best home. One of them is remove your financing contingency, right?
Right.
Remove your building inspection contingency, remove your appraisal contingency,
Right.
A financing contingency and appraisal contingency, two different things. And on the appraisal side, adding more money, saying to a seller, using an addendum saying, hey, I am willing to cover any shortfall for an appraisal
Right.
in the event that there's a low appraisal. And these are all different methods and tools that buyers and buyer agents are using to help secure a buyer to get a certain home.
Right.
The
Right.
takeaway is banks versus mortgage companies. Let's go through the pros and the cons.
Okay,
All right.
sounds
So
good.
let's start with banks. Really, the pro to a bank is the interest rate.
Right.
Okay. Currently.
Right.
And why? Why can they offer consistently better rates than sometimes
Right.
a mortgage company?
Well, mortgage lenders, mortgage companies their rates are derived from the mortgage-backed securities in the market. So as the bond markets go up and down, our rates are going to fluctuate. The banks have their own portfolio of money. So they kind of decide how much they set the rate they want to set essentially. And when there's a huge fluctuation in the market, the banks are not going to have as much volatility. Now, what banks will do on occasion is they will raise their rates if they get too busy.
To
So
slow it down.
You'll see that to slow the business down.
Right.
And there's no rhyme or reason to that outside of them, corporate up at the top of the
Wait.
corporate.
Do they give you any warning?
They don't give you warning. They just say, hey, we got to slow things down. And, we're going to talk about some of the cons. This leads into that.
Right.
We're getting too much business. We don't have capacity. So
Right.
let's raise our rates and the banks so that we slow down capacity.
Right.
We improve capacity.
Sure, because they get so far behind that it runs into some of the con issues that they have. And in fact, when you talk about, better rates, and we talk about slowing things down, really these two getting the best of the best, meaning that their loan programs are designed to really attract the best, the highest quality, the cream of the crop, as they say.
They're going to take the highest profile clientele with the highest credit scores, the most down payment. They're going to prioritize those people. So if there's any of those things that I just mentioned that is a little bit lacking on a buyer's profile, they're going to have a problem at a bank.
They're going to get kicked out.
Again, another thing we're going to talk about is the
Here we go. Very specific programs.
specific programs, correct. So maybe we should go through these. Poor
Sure.
communication.
Why is it poor communication? They're a bank, Dan. Dan, I have Bank of America, I have Chase, I have Wells Fargo, I have U.S.
Right.
Bank. These are banks. They're open,
Right.
8 to 5. There's people in there. They've got 800 numbers.
Right.
What do you mean poor communication?
Well, the problem is exactly what you just said. They're 8 to 5. Real estate is not an 8 to 5 job business, And a lot of these loan officers, they turn off their phone at 5 o'clock and they're off the clock. And then you can't get a hold of them. If something's happening in the evening and you make an offer, they're not available. Where I would be, or an independent mortgage banker would be available. So it's just, and essentially your file's going through the system, and all of the operations that happen on your file are in a call of basically a huge operations center.
A machine.
And it goes kind of in a black hole, honestly. And you call your loan officer, even if you can get a hold of them, and they'll say, "Hey, what's going on with my file?" It's like, "I don't know. I'll let you know when I know." And I hear that a lot.
Right.
I hear that a lot from bankers.
Yeah.
Like, "Hey, the reason I've asked bankers, why do you work for a bank?" "Well, I can offer these good rates." "What do you
Sure.
not like about it?" "I don't have any control. My file goes into a black hole, and then I can't get good customer service."
And at some point in time, it comes back and says, yay, nay, or I
Right.
need this.
And the problem with that is that could be 2-3 weeks into the transaction,
When you're supposed to close.
right? And all of
Right.
a sudden you have all these problems that you weren't aware of. We underwrite up front.
Okay.
We underwrite in the beginning of the file. They
Sure.
underwrite in the middle or end of the file.
Okay.
So that means there could be a ton of conditions that pop up on you.
Sure. So once upon a time, this is a true story. The client went over to a big box bank that we won't mention, B of A, and they ended up going through the process. And a week, I believe it was a week before closing, I get a call from the loan officer. You might remember this. And she said, "Hey, George, I want to let you know that not only are we not going to close on time, but we just got the appraisal back, and the appraisal was on the house next door. So the appraisal technically isn't being done." Remember this?
Yeah.
And so we're like, what? And so, call Dan. Dan, hey, I need an 11-day close. And actually, at the time, it was a 7-day close because we didn't have TRID yet, right? So I said, we need a 7-day close. And he's like, give me the file. And you closed it.
Right.
Okay. That is not an uncommon story,
Right.
sadly enough. Well, the appraisal thing that was a first, but them not being able to close on time is a issue and a point of concern as we talk about the pros and the cons. All right. They need longer close times.
Yeah.
Okay. Typically 30, 45 days. They don't like to see anything less than that.
Yeah.
Again, big box, very specific programs. So safe to say that, again, because they're getting the cream of the crop and because they have very specific guidelines, if somebody's just outside, whether it's ratios, whether it's income, whether it's reserves, maybe it's, a certain, job, I'm in this new position for a certain amount of time, or I have, I get bonus money, right? And it sits outside of that box, that will kick them out. Right. And you've experienced that.
Yeah, yes I have. First-time home buyers, they have restrictions on those. People who have different residency status,
Okay.
not a citizen. If you're like a permanent resident alien, they have restrictions on that.
Right.
And so there's all these little things that can come into play. The ones you mentioned, credit, ratios, the reserves, all those things come into play. And if you don't have someone looking at those things right in the very beginning, that's when that underwrite in 2 weeks brings all that stuff up.
Okay. Which
And
can
then
blow
you're having
up.
to scramble.
Yeah.
So we do that up front. And then we also have alternative programs available if that is the case, if they do have lower credit score, or if they don't have enough reserve, or if they are a permanent resident alien.
Right.
We have programs for that.
Okay, you're getting ahead. You just hold on here because we're already on the other side. So we're right at the bottom. So we already agreed they only want the best of the best of the best. And hence the reason they offer these rates, because they know they can get the best of the best of the best. Exactly. All right, fair enough. Hours of availability, it kind of comes up here with poor communication as far as when they can do things, because I know it seems really funny. Did you know that people actually will write offers on a weekend on a home? I know, it's crazy, right? But they do. And if you don't have an updated pre-approval letter, not a pre-qualification letter, a pre-approval letter, well, you can't present your offer. Right. Because in the financing addendum, it states you will include a copy of that letter, and you're going to be scrambling, trying to get a hold of this person that is not going to be in until Monday. Right. And as long as Monday is not a holiday, and they might be able to get something to you. Sadly enough, most of the time, not timely, but they might be able to get something to you by the time you need to do your offer review. That just creates stress and strife and, well, doubt. And that's really sad. Yeah, that's not how you want to enter into your home purchase, right? Not the best way to start. It's like running a marathon, right? The last thing you want to do is head off the starting line and fall flat on your face and break your nose.
Right.
Okay, just saying, All right.
Right.
Now, let's talk about mortgage companies. All right. I'm going to start with the con because, well, it's short. It's a short list. It's a short list. Sometimes rates.
Right.
Okay.
Yep.
And that's because they do not have their portfolio of money like the big box banks.
And it's a different model. They don't have the amount of staff that we have to make sure your file closes. I have people that work on the weekend, like you just mentioned, and there's a little bit higher cost for my model, but you get the service and the speed and the accessibility.
Okay, so let's talk a little bit about access. So, you just mentioned, you're not 24/7. I get that, but you are and can be available on weekends as needed.
Yep. My
right?
team and I are available, and we will even do pre-approval letters on weekends.
In which
you
you
applied on the weekend.
Right.
I've had that happen. People, hey, I want to make an offer in a house, but I haven't applied yet.
Right.
Get online, apply online, and let's get going, and I can get them an approval letter.
How long does it take to go online and get pre-approved?
It takes you about 10 or 15 minutes to fill out the application.
Okay.
And then you have to upload some documents to our portal, which, depends on how accessible that is.
Okay.
But if it's pretty accessible, a lot of it's online. We also do auto verification, so a lot of it I don't even need
Okay.
to do the pre-approval. But within an hour or two, I would have an approval letter to you.
Perfect.
By the time you apply.
So if a property comes up and somebody absolutely needs to get a pre-approval and whatnot, within really an hour, hour and a half,
Yep.
2 hours at the most, you can have them geared up and ready to go.
That's right.
All right.
And that can happen on the weekend.
Perfect. All right. We talk about a shorter close, and of course I put in brackets there the 11-day close.
Yep.
Okay. How many people do you know that offer an 11-day close?
I see it more and more, but not very many actually can implement.
How many actually have an 11-day close? Not a 16, not a 20.
I don't know of any.
Because I know of 0.
Yeah.
The fastest, the next fastest I have heard was 16 days.
Yeah.
But that means that they already had to have a file already in place. They had to have everything ready to go, and they still have to push it through underwriting. But the fastest would be the 16 days, and that's the next fastest, which is, I guess, close. But when at the end of the day, it's another week. Really a week longer than you.
Right.
Actually, a little bit more than that, 5 days in a week, right? All right. Because when we talk about 11 days and 16 days, we're also talking about business days, all right? The average closing takes about 30 to 45 days. Even a cash offer, a cash buyer, it's going to take 7 to 11 days. With TRID, we had to take it from 7 days to 11 days because of the federal reporting. The however is, Dan, you're the only one I know of with the 11-day close. So you can go in and you actually get underwritten beforehand, which is the super awesome part of this, because now you can go in as a cash buyer subject to an appraisal, maybe, right? And you can compete with cash offers. It just depends on your entire portfolio. And Dan will give you feedback on what that looks like and what your risk levels are and things like that.
And it helps win offers. Have that.
Oh, hands down.
Yeah.
Absolutely, hands down. That's one of the reasons that we talk about it. You have a lot, a mortgage company has a lot more programs available.
Right.
Hands down. Flexible underwriting, meaning that like here, if they're not in that very specific box, if they're one thing out of this box, most of the time they don't get an exception, and we hear people going, hey, I have to go to a different lender, or I don't qualify for that rate, right? Which again, you need to watch that video, and we'll post the link with it. 5 questions you need to ask when getting quoted mortgage rates, because I can't tell you how many times we get feedback from people saying, oh my gosh, I can't believe it. I asked the 5 questions and we don't even qualify for that rate because of loan balance, because of credit score, because of purchase price, or one of them said that, you need to have 35% down, some innocuous number, right? 35%, who puts 35% down?
Yeah.
Okay. And by the way, your mortgage balance couldn't be any higher than like $620,000. Okay, well, that's a little unrealistic in the big picture of things. So understand, they provide these because it's called marketing.
That's right.
It gets you to call.
That's right. They put these teaser rate, A little bit. I wouldn't. I don't know if I want to say bait and switch, but kind of a teaser rate out there.
Right.
And if you really read the little fine print, you see all these factors, and it's like, oh, wait a sec, I don't have 760 credit scores. I have 730 credit scores, which is still good.
Right.
But then you don't qualify for that rate. And
Right.
so there's a lot of marketing going on, like you're mentioning, that entices people to go after those lower rates.
Sure. And, hey, listen, marketing is marketing is marketing. No different than anything else that you see out there. You need to make sure you read the fine print, okay? Getting back to the fine print, we talked about you have more flexible underwriting and then evening access, meaning that typically a mortgage lender, okay, like yourself, will be more flexible. You've had a team, gosh damn, we've worked together for a long time, but I have to ask, how long have you had your team?
I've had my team 15, 17 years now. My same group that I work with. Yeah. And they're awesome. They're incredible. So I really appreciate them.
Yeah. So these guys, here's the thing, right? Okay. Sometimes you're going to risk a little bit in rate, sometimes. But the assurance and the customer service that goes on the backside, the knowledge to know, especially if you're waiving all contingencies and your earnest money is on the hook, because I have not seen an earnest money less than $50,000 in at least 6 or 8 months, and they're well north of that. Hey, listen, when you have that much money at risk, to have the knowledge and the assurance that you are 100%, can close on that loan, on that home, there's value in that. So that's what we were talking about today, banks versus mortgage companies. Yes, the banks have the one side where they have better rates. They have their own money. But understand, in the big picture of things, you better make sure that you fit into that box. Otherwise, I think you'd be talking to somebody like Dan later.
At the last minute, and it's a scramble. That's
Yes.
when it's not fun. So.
No, it is a fire drill, without a doubt,
Yep.
right? To
Yep.
coin my previous career. All right. If you have any questions, post them. We want to hear about it. Subscribe, hit the bell so that you know when these are coming up. Dan Golden will post his information here also. If you have any questions, ask Dan. There's no strings attached. That's the best part, right?
Yep, absolutely.
Right on. And in the meantime, we'll see you on the next video. Take care.
Have a good day.